Thanks again for joining us here on the Market Day Report. I am Marlon Bowling with you. It's a Tuesday, as we like to call it, a crop progress Tuesday. The numbers came out yesterday afternoon from USDA, and we've been watching those numbers very closely. And the market has too. The market really reacting. Turnaround Tuesday, in fact, today on the grain trade, they really washed the market out yesterday in advance of the crop progress and condition numbers. However, that did seem to indicate and reinforce the thoughts that we're having some crop problems in the north. In fact, I went ahead and pulled out a few extra numbers separately just for South Dakota and North Dakota. If you don't mind, let's take a look at those numbers. It's kind of eyebrow raising, I guess, if you gander at these numbers here for a little bit. On the South Dakota number, let's take a look at the corn, soybeans, spring wheat, and also the pasture land. On the condition, oh, well, this is North Dakota on the screen. That works too. Okay, corn at 58%, good to excellent this time around. So that was actually down 9 points from last week. Now the soybeans, we didn't have a report yet last week. This is the first one, and it comes in at 56%, good to excellent. Spring wheat, 43%, was down 9 points from a week ago, and on the pasture land in North Dakota, it's now at only 18%, good to excellent. That's down 12 points from a week ago. On the other hand, we do have the South Dakota numbers as well, and here you have the corn, 45% good to excellent, down an amazing 17 points in 1 week, just from last week. The soybean number, the initial report this week is now 43% good to excellent. Spring wheat in South Dakota, only 13% good to excellent. That's down 12 points just from last week. Pasture land, only 26% good to excellent, and that's down 8 points from last week. Just wanted to point those out in that northern plains region. Very good news to hear that they are getting some decent rainfall here this morning. Let's go visit with Brian Hoops. He's the president of Midwest Market Solutions, and he is based in Springfield, Missouri. He joins us now, and Brian, thanks for joining us. Just wanted to point out the problems we're hearing about in the northern plains, and I'm sure with your offices scattered all over the Midwest, you've been hearing all about it.
Yeah, we have an office in Yankton, South Dakota, one in North Dakota, a couple close on the border there in Minnesota. So they've been telling us all about that there's crop problems in those areas. We have been working with our clients as, they've got a real poor growing season going on in those areas. Now, there was some rain overnight and this morning, and those are real beneficial, but it's going to be badly needed because they've gone a long time without any rain. There's another forecast for about 10 days out that says there's going to be no rain after these rain showers move through.
And I've been hearing a lot of stories that it's just too late for some of the crops. For example, maybe some of that spring wheat, it may just be so stunted, even if they do get a lot of rain, it won't come back and make a large crop anyway.
Yeah, that's exactly right. This crop had already gone through the boot stage and into the head stage, and it's going to be too late, too little too late, I think, for a lot of that crop. It's going to be really poor yielding. And this comes at a time when we're going to need that high-protein milling wheat out of the Dakotas and Montana, Minnesota area to blend with some of our lower-protein winter wheat numbers that are being harvested. So there's going to be a big demand, I think, as we go into the fall and into the winter months. The market's already building into a premium structure, meaning September's built a premium over the December contract, which is over the May contract and over the March. And that's fairly bullish, as it tells us that the market wants the product from the farmers right away. It needs it badly. So this is a year where producers should not be trying to store things.
Urgent moves in the grain markets today. On the corn market, we've been trading higher in a rebound from yesterday. We are up 4 in July at 381 1/4, December up 4. On the soybean trade right now, you have your July contract 7.5 higher at 938 3/4. November now up 7. And in the wheat trade, in Chicago wheat, we have July 8.5 higher at 442 1/2. We have Kansas City July now at 454 1/4. That's up 11.5 cents now, even though the combines are rolling. And in the Minneapolis wheat, we have July now trading 20.5 higher at 621, even after getting heavy rainfall here this morning. We'll come back in a moment and we'll talk more with Brian Hoops about the markets when we come back after this. Just like in the spring wheat, we're seeing a higher tone here in the oats market again today, too, where we were just showing our viewers at home that oats are trading 3 to 4 higher today. In the cotton market, how's it doing so far this morning? Well, right now you have your July cotton down 76 points at 74.37 per pound, and now you have December new crop down 69 points at 71.75. Why? Well, on the national crop condition summary that we had yesterday, we noted that the corn condition dropped by 1 point from last week. However, the cotton actually went up 5 points to 66%, good to excellent this week. It had only been 61 the previous week, so it went the other way, and the crop is seen improving. That's putting pressure on the market here today in part. Let's rejoin our visit with Brian Hoops of Midwest Market Solutions and find out what's going on in the livestock trade today. Brian, let's look at this live cattle and feeder cattle market and maybe get your impression on what you're seeing happening here. It's a mixed affair right now with August live cattle just a nickel higher at 121.60. We've been on both sides of unchanged here today. October unchanged at 118.20, and if you look at the feeder cattle side, we have the August contract 15 higher at 151.70. And now you have September 27 higher at 151.50. Even though we're higher on the day, we're a lot closer to the daily lows than what we are the highs, that's for sure.
Yeah, this cattle market really sold off on Friday and carried into Monday's trade, having a little technical recovery, maybe just turn around Tuesday. The fundamentals aren't real negative in this market, but I think the charts and the technicals are starting to turn that way. There's a potential double top on the August live cattle contract, and that has attracted a lot of selling towards that. And of course, we know that there's a lot of fund longs in this market. If they're going to get out of this thing, we could see the market, continue to move lower here, but nobody really wants to go short with that August contract deeply discounted to the cash markets.
And just when the lean hog trade gives signs that maybe the top is in, of course, it'll give us another head fake. So today on the lean hog market, as we look at prices, that active July contract is now up $1.58 at 82.28. Got as high as 83 bucks there, and it has had a recent high in that contract of 83.52. It got up there within, kind of hunting territory of that area again, but now backed off of it. What do you think of this hog trade here? It's sending mixed signals right now.
Yeah, the hog market's kind of similar to the cattle in the standpoint that the fundamentals are pretty friendly to this market. You look at the bellies, the loins, the cash products, they're all very strong. The product markets remain very strong here, and that's a strong fundamental. But you look at the technicals, you go back to Friday's trade, July futures made a potential double top on the charts and had a very poor technical close. I think that's why we sold off yesterday, had a lot of follow-through selling, and now we're starting to see a nice recovery as the fundamentals do show improvement.
Do you think the funds will protect their position or not?
I think for a while in here, until we start to see some fundamental weakness, we're going to see pretty decent fund buying. Big dips like we saw yesterday probably going to be viewed as buying opportunities until that technical trend starts to change or the fundamentals change. I think we're looking at stronger price levels.
Excellent. Thanks, Brian. Appreciate it. Brian Hoops, president of Midwest Market Solutions in Springfield, Missouri, and always look forward to getting his thoughts on what we're seeing happen in the markets.
Very much
live.
So. Live, and also a little upside action to see definitely change the pace of what we saw yesterday.
Yeah, it's a good thing we have live quotes today. We need it.
Exactly. Thank you very much, Marlon.